What's shaking in the world of private equity? In September 2023, UBS released a quarterly private markets report. In the US, the internal rate of return for US private equity in Q1 2023 was up to nearly 3%. In H1 2023, it was said that there were fewer private equity deals in the US compared to 2021. It was said that the total value of these deals also dropped significantly, down by close to 50% from the highest point in late 2021. But it said that the level of activity is still higher than it was before the COVID-19 pandemic. It said that private equity firms have changed their approach to deals. They are now doing smaller deals, adding on to existing investments, focusing on companies with growth potential, and buying businesses from larger corporations. These strategies would help them keep investing money even when it's difficult to get loans. A take private is a transaction in which a publicly traded company returns to private company status. There's a continued interest in taking companies private. As of June 2023, there were 43 such deals announced, according to Pitchbook. Raising money for new investments is currently slow. It may stay that way till the end of 2023. Why? Because investors seem to be very careful about where they put their money. Companies looking for deals would need to adapt to these more challenging financial conditions. But there's still a lot of dry powder, which is unallocated capital that PE firms have raised from investors but have not yet used to make investments in private companies. At the same time, exit investments may remain slow, which has created a buildup of companies waiting to be sold because the overall economic situation is precarious. The secondary market is where existing investments are sold by one investor to another. In H2 2023, there may be an increase in activity there. The difference in the prices that buyers are willing to pay and sellers want seems to be getting smaller. This may be because the public stock market is set to improve, so buyers may be more confident about the economy. They may be willing to pay a price that's closer to what sellers are asking for, which may be good news for people involved in these investments. When it comes to buyout strategies, raising capital is said to have been resilient in 2023. Buyout strategies including investing in more mature and established companies. PE firms that use buyout strategies acquire existing companies, often with the goal of improving their operations, expanding, or restructuring them. In August 2023, buyout strategies raised about $280 billion, according to Preqin. Established buyout managers were said to have fared better in attracting capital, while newer and smaller players have faced hurdles. And because of uncertainty in the overall economy, companies aren't being sold or exited as quickly as expected in the world of private equity. This has caused a problem with the flow of money in private equity. Investors have put more money into the investments than they've received back. In 2022, US private equity investors were said to see a decrease of about $32 billion in their overall money, and global secondary deal volume for H1 2023 was said to be close to $45 billion. This is said to be down 25% compared to H1 2022. What is the future of private equity as we reach the end of H2 2023?